Hey, it's Rafael Cintron here, and in this video, we're gonna talk about taxes and drop shipping, or if you're running a Shopify store and you're not drop shipping, how to take care of taxes, how to register your business to pay less tax, what strategies you can use legally to reduce your taxes, and how to pay 0% tax on all your business profit. All legal. I'm gonna show you all the strategies that I've used throughout my years of learning about taxes, building my business. I'm gonna show them to you right now. Disclaimer, I'm not a financial or tax advisor professional. I'm just speaking from experience and spending the last 4 or 5 years building my business, learning about international taxation, speaking to more than 100 accountants about taxes in many different countries, especially the USA, but I am not a tax professional. I am just a random guy on YouTube talking about my information. This is not tax evasion, tax fraud, tax lying. We're not committing any crimes here. We're doing everything absolutely legal. We're only talking about 100% legal strategies to save on taxes. Consult a tax professional or a lawyer in your country before you do anything. Do not do something just because I tell you to do so, because again, I'm not a tax professional. All right, basics. In most countries around the world, especially developed countries, you don't need to pay taxes to the government unless you actually make a profit in your business. When you look at how much revenue you made and you look at how many expenses you have in your business, staff, products, software, whatever it is, you deduct all of that to get the profit. And that profit will be taxed at a certain rate depending on who you are, how old you are, how much you made, what country you're from, but you still need to report your losses even if you don't make any profit. Let's say your business lost $500 in 2020. Now, you wouldn't pay tax on that because it's a loss, but you would still report it to your government, to your tax authorities, that you have that loss of negative 500. I would definitely recommend reporting your losses because you can deduct them from any income you make. Let's say you make $10,000 and you have a loss in your business of 500, then that taxable income becomes 9,500, depending again on your country, on the different laws that you have in your government. But I would definitely recommend you report your taxes. No matter if you have a loss, always report it. It's gonna help you in the long run. Now, setting up a legal company, especially in the United States, I recommend to set up a legal entity, that be it an LLC in the United States, a Canadian registered company, a UK limited company, an Australian registered company, once you reach $10,000 in revenue, $10,000 in sales, which will put you at a level where you are making some profit, you're starting to scale your business, you're starting to see results, and then from there on, it starts to skyrocket and compound. That's when you register legally your business and you are working hard enough for it to be considered a business. Now, a business means you work on the company for more than 500 hours per year per IRS USA definition. The Internal Revenue Service of the United States, which is the one that basically everybody's afraid of because they take your tax money, they define a business if you work on it more than 500 hours per year. 500 hours per year basically means an hour and a half per day or more of the entire calendar year. This is to differentiate it from passive income. So if you work 20 hours per year, that's a passive income. That's not a business income. Legal entities also protect your personal finances from getting wrecked. If you get sued, let's say you send a product to someone, that person gets very ill with your product, they can sue you and they can't take your personal materials. They can't take your personal money. They can't take your personal possessions, your house. They can only take what is of the company. So you separate yourself, you separate the company from your personal belongings. Now, how are profits taxed in that registered company that you just registered once you're making $10,000 in revenue? In the United States, if you're a single member LLC, let's say I'm starting to make money with e-commerce, I want to register a single member LLC because I'm a single member, not a bunch of people, the profits pass through directly to the owner, and the owner pays at their personal income tax rate. So if your business is a single member LLC and you make $100,000 in taxable income, it is personal taxable income. It passes through to the owner. You can also decide to be taxed as a corporation, not a single member LLC, but a corporation, either a C Corp or an S Corp. The difference is more complicated than I can explain in this video. Basically, if you're a US citizen, you can elect to be a C Corp or an S Corp. If you are not a US citizen, you can also elect to be a corporation, but you can only elect to be a C Corp. So if you're looking to pay corporate tax rates or lower your tax rates by using a corporation, and you're not a US citizen, then you would need to do the C Corp, and then you can be taxed at the present corporate tax rate. Right now, in the filming of this video, it is 21%, but President Biden wants to raise that to 28%. Also, it's important to note that before 2017, before Trump actually lowered tax rates for corporations and big companies, the USA had the highest corporate tax rates on planet Earth, meaning if you register a company in the United States, you live in the United States, and you pay a corporate tax rate, it would be the highest in the entire world. So that's something to think about. The next one up, single or married. So let's say that you're married, you're 30 years old, and you have kids, you can pay less tax than somebody that is single. Married people usually have advantages when it comes to paying taxes, especially both are citizens of the same country. In the United States, if you are both citizens and you are both paying tax, you can pay what's called a married filing jointly tax return. And that's basically filing at the same time as married couple, and you can save a couple of $1,000s in tax. If you're married, you can elect to file as married separate or married jointly. Married jointly will typically save you a few thousands in tax. I file married separate because my wife is a non-US citizen. So if you're a US citizen with a non-US citizen wife, it gets a lot more complicated. If you want help on that, I can do that later, but it definitely will save you a few thousands on tax if you do marry jointly, if you file along with your wife or husband, whatever it is. You also have the option of being taxed as head of household. This also gives you some advantages, which means that you are married and have a dependent. So your dependent can be a child or a parent who you take care of. Now, this has to be very honest when you file for head of household. If you, let's say, have a parent that lives with you, but they only live with you a month of the year, 2 months out of the year, and you also have a wife, and you have a child that maybe the child is traveling around the world or something, and the child only lives with you 4 months per year, 5 months per year, does not qualify as head of household. So if you have a dependent, meaning a child, they need to live with you 6 months per year or more, and if it's a parent, they need to live with you all the time in order to be considered head of household. So this is something where there's a gray area. A lot of people consider themselves head of household, but in reality, they are not from the IRS point of view. Now, another one that scares off a lot of people and makes you not sleep at night is sales taxes. How should they be charged? How should they be paid? A very complicated area. If you have a nexus basically means a connection in a particular US state, be it Texas, Florida, Ohio, Nevada, whatever the US state is, you might need to charge and pay sales tax to that state, especially if you have a location. If you have a warehouse or you own some kind of office in that location, you need to pay more sales tax. I would not recommend doing this alone, and I'm not going to go into the details of this because I still don't understand it after years of learning this. Hire an accountant in your area. Go ahead and find someone. Let's say you live in New York. Find somebody in New York. Call them up. Hey, how do I handle my sales taxes? Or you can use a software like TaxJar. It's pretty cool. TaxJar is basically a website that lets you calculate all your sales taxes to take care of everything. Back in 2018, when I was doing my tax returns, I spent 200 plus hours calculating all my sales tax, all my income taxes by myself, and it was not worth it. I just wasted a bunch of time when I could have just hired a professional accountant. Now, for non-US citizens that want to register an LLC in the United States, non-US citizens can own and operate US-based LLC companies from outside of the US. If you are from Costa Rica, you can make an LLC in the United States, basically register a single member LLC in the United States and pay 0% tax on that LLC's profits if they do not live in the United States. So let's say you live in Costa Rica, you register a business in the United States, single member LLC, you do not touch the United States, you do not go there to live there or make business there or sell anything there, you just live in Costa Rica, but you make your profits through the United States, you do not need to pay any tax to the United States. You might need to pay tax to your country, to Costa Rica, or whatever the country is in this case, but you don't need to pay tax to the US. Since the profits pass through to the owner, like I said, single member LLC, profits pass through as personal income. The owner is a non-resident alien. They call this, it's kind of funny, but it's non-resident alien, meaning a person that is a non-resident, non-US citizen of the United States, then the owner pays 0% tax. Now, this might lower your US taxes. It might not lower your whatever country you're from taxes. So you got to make sure that you put two bases on that. You lower your US taxes and you also lower your country of origin taxes. Even if you pay no tax, you still need to report the income of your LLC, meaning if you make $1 million through that US LLC, you pay 0% tax on it, but you need to report it in order to be compliant with a form called 5472. Extremely complicated form. I would recommend you hire an accountant to fill that for you, and it has a lot of different things. And if you file it incorrectly, you can get penalized by up to, I think, $25,000 or $50,000, I think is the penalty. So it's really hardcore. So you want to make sure that you file this properly. Now, what everybody wants to know is how to save money on taxes 100% legally. Again, I'm not a tax advisor. I'm just a random guy talking on YouTube. Get an accountant to help you. US citizens. Now, US citizens are a special breed of people. We pay tax on our worldwide income, meaning that if you're from the United States and you move to Brazil or you move to Japan, you will still pay and report taxes to the United States because it's the only country in the world that taxes based on citizenship. First step, what you can do. Let's say you live in a high tax state like California or New York. I would never recommend anyone to register a business in California or New York. You're gonna get screwed long term. But if you already did that, then you want to move to a non-income tax state like Florida, for example. It's written in the Constitution of Florida that there's no income tax. So very unlikely that this will change in the near future. The second step you can do is you can move out of the United States completely. Now, if you move out of the United States to another country, let's say you move out of the US to go to France, or in my case, I travel all around the world and I don't live in the United States, and you spend 30 days per year or less, you get what's called an FEIE, Foreign Earned Income Exclusion. So let's say you're a US citizen, you're traveling around the world like me, going to different places, Dubai, Ukraine, you're going to France, you're going to this and blah. That allows you to avoid paying tax on 107,600. I put an extra zero there. It's not a million. $107,600 in profit per year, meaning you can make $107,000 per year in profit by yourself, personal income, earned income. It can be passive income or income from dividends or from you're renting an apartment. It has to be earned. Business or job, earned income. You can not pay tax on $107,600 per year. That also goes up with inflation. So I think 2022 gonna be 109, then it's gonna be like 112 and so on. Each year it goes up. Now the third step is to fiscally move outside of the US by setting up a foreign corporation in a low tax country. So let's say you're living in California. First step is to get out of California, go to Florida, let's say, or Texas. And then once you're there and you see that you only lowered your taxes by 4 to 5%, you can move out of the United States and go to, I don't know, Italy. And then you can deduct $107,600 per year in profits while living in Italy or basically traveling all around the world. Now, if you want to save more on tax, you can go to a low tax country. In my case, I went to the United Arab Emirates, Dubai. I absolutely love that country, love the people, love absolutely everything about it. It's super hot, it's nice, and you can register a company there. It is an expensive process, but once you do that, you can save a lot of tax by having a foreign corporation. Now, foreign corporations still pay and report tax. Me and my wife own our company because we work on it 50-50. My wife actually helps a lot in the back end with the client support, a lot of building these presentations, building a lot of different things that come in my business. So you can either start it with a partner of yours, you can start it with a business partner, you can start it by yourself. Now, in a foreign corporation, if you're a US citizen and you own more than 50% of that corporation, you're subject to what is called the GILTI tax. GILTI is a really long explanation phrase that I'm not going to talk about here, but it's basically a 10.5%. It may be higher with Biden. It might go from 10.5 to 21, all the way up to 28. We don't know yet. That taxes any profit on a foreign corporation makes to discourage profit shifting or offshoring profits. So basically what was happening when the GILTI tax was passed in 2017 by Trump is that a lot of companies like Spotify, Amazon, Tesla, or not those specific ones, but giant companies, billion-dollar companies. They go and they have a US company and they have a company in Ireland, for example, and they send all the profit from the US company over to Ireland. That's called profit shifting. It's illegal, but it's called offshoring profits. And you can send those profits to Ireland and you would only pay Irish tax rate. So basically, from the US company, you would send like $1 million to Ireland and you would pay a much lower tax rate than what you would in the USA, because the corporate tax rate in the US is 21%. Ireland, I think, is like 10%. So what the US did is, this is bad. We can't let this happen. So we're going to apply a tax of 10.5% to all those offshore profits. Now, this is very complicated because you can also own the company with someone. For example, my wife, I had to teach her how to do a lot of what we do and help me run the company. She runs a lot of the finances too, so she does a lot for the company. So you cannot fake this. You can't just say, oh, I'm 50% and this guy 50%. They need to actually be working for the company properly, like my wife is for mine. So if you go and you set up a foreign corporation, let's say in Dubai or in the British Virgin Islands, or you go to like Bahamas and you set up a company, you will still need to be paying the GILTI tax. Now, be careful when setting up a foreign corporation. There are a lot of countries, specifically Panama, Belize. There's a lot of other like very small island countries and just really weird incorporations that you can do. You can start a company in Gibraltar and a bunch of other countries that are 0% tax. I would be extremely careful because some of these foreign corporations, when you set up the foreign corporation, it's all well and good. You have a company, but you can't get a bank account. And a lot of these really small countries are hard to travel, especially now because of the whole situation around the world. So you can't travel there. You can't start a bank account. It's really hard to send money from the LLC to that company. So it just doesn't make any sense to have that corporation. So you want to start it in a big country that has a lot of money, that has a lot of experience with offshore companies like the UAE, like, let's say, Ireland or Estonia, or one of these countries that have a lot of people that go there to incorporate companies. And if you're a US citizen, and you own and profit from a foreign corporation, you may need to file many forms, very annoying forms, I'm going to tell you that, including 5472, which is the one that you file if you're a non-US citizen owning a US LLC. But in this case, since you have a foreign corporation as a US citizen, you would file Form 5472, 5471, which is a report of a US citizen owning a foreign corporation, and FBAR. FBAR forms are basically foreign bank account reporting forms. And what you do is if you have a bank account outside of the US, if you have a bunch of bank accounts, let's say you have 20 bank accounts outside of the US, and the total amount of the balance of all of those accounts is more than $10,000, then you need to file an FBAR or a foreign bank account reporting form for all of those accounts. So you would need to file 20 FBARs. Very annoying, very hard to do. I went through this process, so make sure this is the right decision for you. Now, to non-US citizens, a lot easier because you are not taxed on citizenship income. What you can do is you can move out of your high tax home country. If you're from the UK and you want to move to Dubai, you want to move to Ireland, you want to move to British Virgin Islands, whatever it is, and you incorporate your company there and you live, this is not on every country, this is on some countries, don't quote me on this, check the country that you are moving out of first to check. You can live less than 90 days per year. So if you move out from the UK, you move to Dubai, and you live in UK less than 90 days per year, then you do not have high balance bank accounts in your home country, high tax home country. You're from the UK, you move to Dubai, you don't keep any high balance bank accounts in the UK, you don't have any properties in the UK, and you don't have anything that might consider a link. Basically, you don't have any big possessions, you don't have like a few cars or something that can be considered that as your tax home. So you move out of the country, you move to Dubai, you don't keep a lot of things in the UK. The second step is to set up a foreign corporation in a country like the UAE, United Arab Emirates, or Estonia if you want to stay in the EU. There's many other countries that you can set up a company. These are just the ones that I recommend to pay much less tax. So in the UAE, you pay 0% tax, literally 0%, that's how much you pay. And then Estonia, I think it's a few percentage points, but it's not that high. You know, you can go from paying 50% in the UK to like 10% in Estonia. You save a lot of money there. And the third step, you can either live in the country of your corporation, so you move from the UK to Dubai and you live in Dubai, or you can travel around the world as a nomad and basically go anywhere, have your company in Dubai, not go more than 90 days to the UK, not have any links, and then basically pay zero tax to nobody. And then your life is great and Gucci. But I would definitely recommend to talk to an accountant first before you do any of this because it might differ on the country where you're coming from. Now, other important things to note when you are preparing your taxes, or maybe you want to save on tax and you want to do something else, you want to be honest always. You don't want to try to hide income in any way, hide profits. You don't report personal expenses or luxury expenses as business expenses. Let's say you buy a Ferrari with your business profits. You don't want to say, oh, I used the car for business purposes. They're going to see right through that. And they're going to say, dude, why you bought a $500,000 car for going to your office? That's not going to happen. So always be honest. You can be considered tax evasion or commit tax evasion and tax fraud, which will land you in jail. Many countries, especially the US and the UK, they are very hard on tax evasion. So if you try to evade your taxes, not report your taxes, not pay your taxes, you are going to get massively screwed. You want to talk to a certified accountant in your country to make sure what you are doing is legal. Again, I am just a random guy on YouTube telling you information that I know from my personal experience. Death and taxes are unavoidable, but you can lower the taxes one so it doesn't kill you. So the two things that we can't avoid in life are death and taxes. So just because you might be doing all of these strategies, maybe there's like a 1% tax, 2% extra tax that you need to pay here and there. There's always taxes. You cannot avoid them, but you can pay a lot less of the tax. Also, things that I am doing personally and that I would recommend you to do to protect yourself from taxation, giving your government all your money, is to, for an extra layer of protection, you can also get dual citizenship. If you have US citizenship, you can get another citizenship. Maybe your family is from Mexico or your family is from Italy. Then you can get citizenship by descent, basically getting a passport from your family. Or maybe you marry someone. Like I'm married to a Ukrainian national. I'm planning on getting Ukrainian citizenship soon. So having multiple citizenships. And you can have multiple passports around the world. You can have dual citizenship depending on your country. Some countries don't allow having dual citizenship or multiple passports. Check that. Many countries also offer passports by purchase. A lot of them are very small countries, islands. They all have 0% tax, and you can buy the passport with a donation. Usually it's $100,000 or more. You can buy a passport, which is pretty cool. If you're a US citizen, there's no way to completely remove yourself from taxes. You're always going to pay some tax, have to do some reporting. The only way is to renounce and give up your passport and your citizenship, which is possible, but I wouldn't really recommend it for a lot of people. So what you can do is you can go to an embassy. Let's say you have two passports, an Italian and a US citizenship. You can give them your US citizenship, do an oath of renunciation, say, I do not want to become a US citizen anymore, and renounce your passport, and you no longer have to pay or report taxes on your US or report to the US. But this is a big step. I wouldn't recommend it to pretty much nobody. I would recommend on this channel unless you're really thinking about removing yourself from the US. And be careful with becoming a US citizen or moving to the US if you make a lot of money. If you are let's say you're from Russia or you're from Australia or you're from whatever country and you're thinking, oh, let me move to the US, let me become a US citizen, or you're married to a US citizen, you're thinking, oh, I want to be a US citizen because I can travel all over the world. Well, you also need to pay and report tax on all the money that you have. And there's a bunch of other taxes that are coming up very soon. So make sure that you know the consequences of that action. Now that you know all that you could possibly know about dropshipping and taxes, how to save money on tax, what things to do about taxes, always make sure to consult a tax professional. If you want to mentor with me and actually talk to us directly and see how we can help you, maybe grow your business, get more profit, save on taxes, whatever it is that you want in terms of all of the business. Again, I'm not a tax professional, but I do help people scale up their Shopify business, grow into the seven-figure level, and automate them as well. You can click that first link down in the description and set up an exclusive mentorship call. It is for free for 15 minutes. Just go to the link down in the description, callmerafael.com, set up your best time, book a call with us, and let's get you results. If you want to grow your Shopify business and make profits, get more sales, and you want to know what products you need to sell in this year and beyond, I actually made a list of the top 50 winning products to sell this year and next couple of months to get the best results for your Shopify store. Check them out right here. Top 50 winning products to sell this year and beyond. Make sure to subscribe, hit that notification bell, and that like button down below, and I will see you on the next video.